Hi, I'm in beautiful Rosemary Beach in the panhandle of Florida off the Gulf of Mexico. And I was just thinking about the hidden expenses of owning a rental property. First of all, when you do a rehab on a property, those are expensive. That means you're replacing floors, painting walls. You might be adding new countertops, maybe even changing cabinets. You might be changing plumbing fixtures, electrical updates. You might be changing door hardware or lighting hardware and fixtures. You might be doing some updates on landscaping, changing fences. Sometimes it's a little bit of a thought to book that to cash flow and take it out of your annual income if you even have enough to cover it, depending on how many rental properties you have. And depending on what your numbers look like on them will allow you to do that or not. But I usually book it to capital contributions, which means it doesn't come out of my income statement. In turn, it's booked in my balance sheet. So it shifts over from, increase in an asset column as well as the liability column. That's just how I do it. There's no specific way to do it. If you talk to an accountant, I'm sure they'll tell you otherwise. But hey, for a lot of us mom and pop, normal people, investors, you can make those decisions for your small business how you choose to. Another thing to consider hidden cost wise in rental property investing and in the rental property itself is something called deferment. So when you have an air conditioner that has a leak in it, for example, and Freon leaks out, you might just want to replace the Freon, which is great. That's usually what I do too. Let's say it costs $400 to add 5 pounds of Freon. I don't even know if those numbers are right, but let's go with it. Roughly, it's that. If that's the case, it might leak out in 3 more months. And you might be like, wait a minute, I just did something to the AC. Why is it broken again? Well, because you didn't necessarily fix it. You just kind of rigged it, if you will. And that is called a deferment, okay? Now, that Freon could hold and not evaporate. A lot of times it does. If it does, you usually have a leak in the evaporative coil within the HVAC, but a lot of people don't want to replace that because it's expensive. So they defer it. So if maybe the Freon leaks and we're in August in Texas, you might add a little more Freon, 2 more, 3 more pounds, and you might defer that expense until spring when maybe you have to replace the unit or replace the evaporative coil. That is called a deferment, and sometimes that is a hidden expense in rental property investing because people forget that things break. And even though you quote unquote fix it, you might not have really quote unquote fixed it. So I find that happens a lot, especially when you work with a property management company and you say things like, why is the AC broken again? I just fixed it. And you technically didn't. The third thing to consider is vacancy. This is a hidden expense in rental property because people don't accurately estimate vacancy between tenants. So when we run property, first of all, there's market areas that help you define this. Plus there's property classes that help you define this. And if those aren't done properly, then your numbers aren't going to be right and you're not going to be correctly estimated on your vacancy. So what you need to do is run comps. And those comps are going to help you discern what is correct and what is incorrect when discerning what your vacancy is. So if I'm looking at a rental property asset in the Dallas market and I'm looking at an A or B property, I'm going to assume that each rental property is going to have 5 tenants in 10 years because I look at properties on a 10-year basis. That's what I call a minimum hold time, 10 years. And the reason why is because most economic cycles are 8 to 12 years, roughly. So I just kind of say 10 years is at least the hold time. And so assuming we're going to have 5 tenants in 10 years, that's 1 tenant every 2 years on average. Some stay 1, some stay 4. Some units, if you're dealing with Section 8 tenants, sometimes you could have very long-term tenants, but it could also go the other way. And if you're dealing with Section 8 tenants, you might have very short-term tenants. Just depends. There's no silver bullet in this. There is no only one answer. But nonetheless, I would assume 1 month of vacancy every 2 years when I run my numbers, okay? Now, you might want to do more and you might want to do less. If you want to be extra conservative, do 2 months every 2 years. If you want to really be conservative, do 3 months every 2 years. that should do it, as long as you're dealing with good leadership in an A property. If you're trying to do this on your own or self-manage it, you probably need a lot more vacancy, maybe 3, 4, 5, 6 months even vacancy, because I've seen bad leadership happen like that. But you want to make sure you run like properties, and use real comps in current time with properties that look like your property. Don't skimp on this and be unrealistic. The market knows. I see this happen all the time. But you need to account properly